bring over, so based on the list of competitors, what do you think your advantages are? And again, this one's a drop-down list. So advantages is our sales systems, for example, or marketing systems, and then
All
describe
right.
why. Yeah. And you just go through a list of those. Yep. And then there's a
Okay.
quick diagnostic on your competitors. So competitors comparisons, here's got competitors comparison management, competitors comparison cost, competitors comparison situation. And the idea with this one is just, if you don't know, have an educated guess. So for instance, if you've got a dress shop, you think Dolce & Gabbana would have a better management system than you. The answer is
Right.
probably yes. Yeah.
Right.
If you've got a local hamburger store and there's a local hamburger store, do you think the management systems are better than yours? No, they're probably about the same.
Mm-hmm.
Yeah. So the same. Three is slightly, their systems are slightly better than yours because you're a little bit weaker. If you've got a four, you're slightly better than them.
Right.
Six is much more better. One is far less. And again, the idea is that the participants don't get hung up on the minutiae of this. It's just an educated guess and or feeling as to how they believe the competitors around them
Mm-hmm.
are. Yep.
Right.
And they'll say like costs. They can say, well, we don't know what their costs. Well, is their production team about the same size as yours or bigger than yours? About the same size. Yep. So
Mm-hmm.
it's just a click, 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 click. Away they go. Don't get hung up on it.
Okay.
People is key people. I'm going to race through the rest of it reasonably quickly. So key people, here's a little picture of people. It's a key people. So again,
Mm-hmm.
it's a list. Now this isn't a list of every employee, but this is a list of key people within the business. So for
Right.
example, it would be if you've got this dress shop lady, it might just be her, but it could be her and her husband.
Right.
It could be
Mm-hmm.
her and the marketing. She might have a marketing manager, or she might have a merchandising manager. So then she puts the first name, last name, their position. Position is, there's millions of positions in here, and she can just type it in and it'll come up. Now, the percentage of time in sales, we're always interested in who's selling in an organisation. So do they spend 5% in sales, 20% in sales, 100% in sales?
And in other words, this is how much time she intends to spend in sales, right?
Whoever this key person is here, but with yours, if she's the
Okay.
only person, then how much time she's going to spend in sales? Because if
All right.
she's the only person, she's going to be doing some admin stuff, some accounting stuff, some merchandising stuff. But how
Right.
much time is she selling on the floor?
Okay. Good.
Yeah, and the percentage of shareholding, and are they a board member? And then that's for any number of people. Yeah.
Mm-hmm. Mm-hmm.
Because the other thing in a business plan is people expect to read who are the key players within that business.
Absolutely.
Yeah. And then once you've got that done, then it comes down in additional information about those people. So you'll see it brings across the name.
Mm-hmm.
What are some unique qualities about them? Any education, their level of productivity if they're existing, low, medium, high, management, top level, middle, lower, non-management, and then their monthly salary and their increase.
Okay.
Now, this one here, this will calculate for the key people, because the other thing that a business plan needs to have is when you see key people, you also, when you're reading a plan, want to see what those key people are being paid.
Right.
So, for example, if the business owner is taking out $10,000 a month, then when you look at buying that business, you can say, well, $10,000 a month, I can equate that to value of the business because I can take over that salary when I buy that business.
Right.
Or they might have a marketing manager there being paid $7,000 a month, and I might be buying the business, and I might go, well, okay, I've got John who's going to be my marketing manager, and I think I only need to pay him $5,000. So I can
Mm-hmm.
start looking at the business plan. And then we've got percentage increase to say, okay, that salary is going to increase by at least 3% a year. And the other one here we've got is starting year.
Right.
So, for example, she might bring on a marketing manager in year 3, which means the system won't calculate that salary until year 3.
Okay. Good.
Um, and it's just got some remuneration. Now, with a new business, employee turnover, so based on do you expect your employee turnover to be low or high? So, for example, if you were going to set up a telemarketing business, you could expect the employee turnover to be reasonably high.
Mm-hmm.
Yeah. So again, guesstimates. Employee
Okay.
willingness to put in extra time. Well, I'm going to treat my employees reasonably well, and they're going to put in extra time. Or I'm going to be an absolute rogue, and if they don't put in extra time, they're going to be fired, and they'll all know that, so they'll put in extra time. So it's guesstimates.
Right.
Yeah. Have you got another 17 minutes we could work together on, and then we'll call it quits?
Yep. Yep.
Okay, great. Okay, next one down, products. So this is where it starts building value for the business. So you've got your products, and it's going to go in a chunk by scenario. So you've got the product name here.
Mm-hmm.
Okay, so what's the name of the product? And it could be, now she's either going to do a single product scenario or a grouping scenario. So she may say female t-shirts. She might go female swimwear. She might go
Right.
female merchandising. Yeah.
Mm-hmm.
If you were going to do a plan, you might do business coaching as a product. You might do a growth club as a product. You might do book series. So you might list, okay, I know Action has a whole range of products, but you might say, well, okay, realistically, I'm going to sell 5 of these things in my lifetime as a coach.
Mm-hmm.
Key focus is going to be on coaching. Second one might be growth club or planning club or whatever. So what happens is you put the name of the product in here. What are the benefits of that product to the consumer?
Mm-hmm.
What are the features of that product to the consumer? What are the strengths of that product to your business? So you might say, well, coaching, you might have put business coaching here as the product name. The benefits to the consumer is that it enables them to create a lifestyle of their choice. Features are it's done weekly. It's paid in advance, so there's some of the features. Now, a strength to your business is high level of cash flow. A weakness to your business could be that, for some coaches, it could be retention. For some coaches, it could be getting the initial client on board. It's a big decision for some clients, so that could be a weakness.
Mm-hmm.
For the dress shop, some of the weaknesses could be that the stock stays on shelf for a long period of time before she realizes.
Exactly.
Yeah.
Okay.
Yeah.
The liquidity or the seasonality.
Correct. Now, some stock like merchandise could be that, even though it sits there, it's got a high level. So the strength could be it's got a high margin.
Mm-hmm. Mm-hmm.
Yeah. Because generally, you look at some businesses, they're going to have a high margin item. So, for example, if you look at a gas station, you might be concerned about the gas price, but when you pick up some oil, you don't care what the oil costs.
Right.
Yeah. Yep. So, hardware store. Or say a yard care place, you might care how much the lawnmower costs, but you don't care about how much the blades cost. So some
Mm-hmm.
items will
Mm-hmm.
be high. Some items the strengths could be high margin, but the weakness may be that it sits on the shelf for a while.
Right.
So what happens is we build the products. See how we go through the list. So we're building the products, each of the products by name, by product benefit, by product, and that's all we're concentrating on in the first stages of the products and services.
Mm-hmm.
Because we're trying to get clarity on what we're selling and how we're selling. Now, this is the main basis of somebody's business model.
Right.
Yeah. So, for
Okay.
example, if I was just a dress store and all of a sudden I then wanted to sell corporate to go out banging on doors to sell corporate wear, that would be a change to the business model.
Right.
So that's important to capture this. Now, this is products and future products.
Okay.
Yeah. So I'll go down to the next section. So on question 1, the big one in the middle. Next one, question 2. See now it pulls over the list of products.
Right. Okay.
Now it's asking for how many units are you going to sell per month. Now, for example, business coaching, you might say, okay, business coaching is valued at 24,000 a year, and I have to sell 10 of those, and we have to have 10 per month or something. Now, pizza business, it might sell for $6.95, and we're going to sell 30 of those a day. We're open 20 days, so 30 by 20 equals, that's how many units we're going to sell per month.
Okay.
Real estate, we're going to sell one a year. They might have high level items, they only sell one. So we're going to sell one a year, which means that we're going to divide 12 months. So I'm going to divide it by 12. It's going to come up with 0.08 because we're only going to sell one a year. So 0.8 a month, yeah. But we're selling it at this one, you'll see item number 6 on my screen here. So we've got item service line number 6. It sells one a year, but it sells at 814,000.
Okay.
Yep. So just a quick calculation of those ones. So she might have, okay, so the average value of say the belts, the buckles, and the merchandising. So the average value of one of those is $25. And I think I'm going to sell about 3 a day. I'm open 20 days, so that's 60. So I'm going to sell 60 of those a month. Yep. Does that make sense?
Okay. Yep.
And then you'll see sales start in year. You've got 1, 2, 3, 4, 5. So if she was going to do the corporate wear scenario, she might say, okay, I'm not going to start that till year 3.
Right.
Same with you. Same with the business coaching business. I'm going to sell business coaching for the first year, and then I'll worry about, say, Growth Club in year 2 because I'm going to have clients that can then attend it.
Okay.
Now, can you see the grey down the bottom of the screen?
Yep.
See year 1, year 2, year 3, year 4, year 5. It's now calculated out the annual revenue of each year.
Okay. Based on those numbers.
Yeah. Now, if there's no units sold in a month and it doesn't sell for anything, then it can't calculate anything. So both fields need to be completed.
Right, for every product they put in the previous screen.
Correct.
All right.
Yeah. Now, if somebody's really lazy, she could just say items in my dress shop as a product. And the average item that I sell is $75. So lazy, and same with a pizza place. You could just say sell pizzas. Or so you could put a one line item in here. The challenge, of course, is that when you start looking at it on the plan, you've got one thing: dress shop, sell stuff in the dress shop.
Yeah? Exactly.
So the clarity is not there. And same with you. You could just say coaching. So once that's in there, you're going.
Yeah, going back to the notion that somebody else is going to be reading this, you have to think about how valuable that would be to them.
Correct. And also it gives you clarity on your business model. But then you don't want to go into, again, minutia where she's listing 400 line items because she'll never be able to list it. Yeah.
Yeah. I like your initial strategy there about breaking it up by category. The swimwear and the evening wear and the casual wear and that sort of stuff.
Correct. Yeah. And the same with the builder. The builder might do house renovations, but you might break that into bathrooms, external bedroom or what have you, because they may be able to list bathrooms in a bathroom magazine. They may be able to list external rooms in another type of magazine. So you start looking at things a little bit logically. Yeah. Then we go down to, so we're at screen 2, we go to screen 3. and you'll see it brings over the product name, it brings over the units sold per month, it brings over what the unit sells for, and then we start looking at, is there going to be a price increase, and is there going to be an annual growth increase in sales?
Okay.
So growth is volume, is customers, or by volume. So if we're selling 5 units a month, do we expect that to grow to 6 units a month, 7 units a month?
Okay.
Yeah. So again, put a number in, and then see how we're just working sequentially down the list. Now this,
yep.
Remember I said before the other question was the second hardest question at the beginning? This is the first hardest question.
Okay.
So number 4, question 5, and question 4 is market trends, industry description. Sorry, industry name, industry description, the trends, industry products. Question 5 is the industry size, annual revenue, and so forth. Now, this is all available. So those 2 screens are available online under a company called IBIS World. Bear with me for a second. I'm just going to go online quickly while I've got you.
Okay.
Okay, I'm going to swing this over onto your screen. Okay, so see, I've just gone to a company called IBIS World.
Okay.
Yeah, and this is now for Australia it's ibisworld.com. For the UK it's ibisworld.co.uk, I think it is. And it gives you industry reports. So if I click on the industry reports here, view all reports. I'll go down to this. Now you'll see that it gives me a list of industries. Construction, manufacturing, yeah, wholesale trade, retail trade. What we've got, furniture stores, floor covering, consumer electronics. Trying to find this lady's store here.
Yeah, this is where it helps if we know the NAICS code, doesn't it?
Yeah, so for instance, you've got florist here, gift shop, pet shops, art dealers, bookstores, fabric craft, hobbies, jewelry, shoes, family clothing, women's clothing. So let's go to women's clothing.
Okay.
Select that one.
Okay.
So you'll see here that it's got revenue in $1 billion, the growth rate, number of employment, businesses, analysis and industry trends. It's got the name of the industry, products. It's got a list of the products, a list of the activities. So when I go back to the screen, you'll see that it's got the industry name, the annual revenue, and I'll just go back to revenue here for a moment. So you've got annual revenue, 42 billion, BN. We go back to here, you'll see annual revenue, you put in 42 in there, you select whether it's billion or million. The industry name for her was women's clothing stores in US, so women's clothing stores in US.
Okay.
Growth rate is minus 0.1%. So there's your growth rate. Number of outlets, you've got businesses, 29,820.
Okay.
People employed, you then put people employed, which is 348,348. Because it will do some calculations on some of these figures. The business plan in the background will do some calculations based. But everything's been taken from these 2 screens.
Okay.
So even though this looks like a nightmare question, it's already done for you pretty much.
Okay.
Now the only thing.
So in other words, while we're doing.
Yeah, go on.
Okay. So in a workshop, we would actually have them open another window, go to this IBIS world, and extract this information, right?
Copy and paste.
Yeah.
Yep. Just type it in.
Okay.
Now the only thing that it won't give them is growth rate projected. And I'll bring you over here in a moment. You'll see annual growth rate projected is locked.
Okay. Because they want you to
Which
buy the
means,
report.
well, yeah, because now the thing is that if you were doing a lot of these, you could get an annual subscription to this, which is a thousandth less than what it would cost if you were to buy one report at a time, and it would allow you to go in there and see all this data. If you're only doing one or two plans a year, then you get the clients to estimate whether they think their industry is growing or declining.
Okay.
And it might give you some, when you start reading it, it might give you some information that you can glean in there. See here it says these factors led to the diminishing of demand for discretionary products, including women's clothing. IBIS World anticipates revenue will grow over the next 5 years. So you could positively say that the revenues that will grow.
Mm-hmm.
Yeah. But that's the only one, based on the fact that it's locked, the only one that I couldn't do. But you'll see here, you've got,
Okay.
okay, think the industry is going to decline or it's going to grow.
All right.
Yeah. And that's
All
the
right.
hardest. That's the hardest question in the whole thing. Marketing trends, copy and paste.
Okay.
Method of distribution. So for her, it could be commission salespersons. It could be she could do some internet marketing. For example, she might sell by party plan, or she could just have retail outlets.
Okay.
Yep. So she just selects how she's going to. Method of distribution is another word for how you're going to sell.
Okay.
And it just goes down then. So you've got method distribution, customers' needs. So what are the customers' needs? What are the key areas that customers really need? They might want good clothing. They might want it clean. They might want it fast. They might want loyalty location. So she just picks from a list and explains why. Customer segmentation. So target customers, how she's going to target those again, a drop down list. She's got a promotional plan here. So outside of the strategy area, which is down here, she's got how is she going to
Mm-hmm.
promote the business, where she can put in and you can help with them. Well, how are you going to promote the business next 12 months? What are you going to do?
Okay.
Yeah.
That sounds like the 10 by 10, doesn't it?
Yeah, 10 by 10. So let's pick
Mm-hmm.
out those 10 things that are going to be critical to your business. And then you've
Okay.
got right down here at question number 13, extraordinary income. So this one here is extraordinary income. Could be that she's going to put in $100,000 into the business.
Mm-hmm.
It could be that there's a one-off sale that will never repeat itself ever again. That's worth $20,000. So these are things that don't fall under the products and services in the areas 1, 2, and 3 above.
Okay.
Yep. So it'll say what the income item is, the year. Sorry, I'll just change those two around. The year it's going to fall into, and then the income received.
Okay.
Okay. Next, I've got a couple more minutes, so I haven't run out of time. So next thing is the money bags.
Mm-hmm.
See how it brings over the products and services again.
Yep.
What it sells for. So it brings over that information already, and then it asks you, is there a direct cost per unit?
Okay. And that was probably based on that cost of goods sold we plugged in earlier, right?
It doesn't calculate. So this one's asking you to put it in
Oh,
the
okay.
box. So
All
if you
right.
sell something for 1,000, do you need to buy it? And
Mm-hmm.
will there be a cost increase, do you think? So you see down the bottom here, it's already put the costs down based on
Okay.
those calculations, yeah. Then we go down to normal expenses, rent, electricity,
Good.
expense month, increase. So again, it's calculated the expenses out. You've got the delete and save buttons.
Mm-hmm.
Before we listed the insurance items, so here you can actually type in what is your insurance that you currently have and what it costs you.
Good.
Here we've got capital purchase. So this is where if she's going to capital purchase, so I'd probably put in here rather than plant and equipment with regards to shop fit out, I'd probably put shop fit out here.
Okay.
But it's the
All
same
right.
construct as what we talked about before.
Right.
Yeah. We've also we can also go. She's going for an investor. So here on funds needed 5, I need to get investment funds, and she's going to get an investor of 500,000.
Mm-hmm.
So we've got capital purchase here, but we've also got funds needed here.
Right.
So put in that she's going to purchase $250,000 fit out, but she needs $300,000 to operate the business.
Right. Okay.
And then we've just got for the rest of it, we've got pretty much a display of diagnostic, and then we've got extraordinary expense items. So they couldn't be put in the normal expense area, but they're going to be things we need to think about, and they're going to happen in a particular year.
Okay.
So that's where we can capture the extraordinary items. Now, what happens from here, once you get to this stage, when you can load, number 13 is you can load financials from the P&L. What was your revenue last year, cost of goods, overheads, and so forth. If you don't have a previous year, then you just leave all this stuff blank.
Okay.
So you've got load P&L and load balance sheet. So P&L, we've got 4 items. Balance sheet, we've got these number of items that it needs to have. However, if you don't want to load a previous balance sheet and P&L and you want to just start this projection from year 1 onwards, you can leave this stuff blank.
Mm-hmm. Okay.
Otherwise, what happens is part of the information that you send to your client, which is on the wiki, is please bring your P&L and balance sheet.
Right.
For the last 12 months, and they just key what was the cash at bank, what was their accounts receivable, what was their inventory. They just key those figures straight in. Now, if again she's brand new, so she doesn't have anything to load. She can't load the P&L and she can't load the balance sheet. So what will happen is when she goes to 15, display projected profit and loss, it's already calculated the whole thing on the screen for her.
Okay.
So based on that sequential scenario you and I just went through on screen, it then produces this on screen for you. Now we can see with this particular client in 2015 their retained earnings is a negative.
Mm-hmm.
It doesn't become positive until 2018.
Right.
So the choice is, do we go back to the products and services and start looking at what we're selling and how much we're selling it for?
Mm-hmm. Mm-hmm.
So let me go back to the money bag scenario and go back to the P&L display projected. So we can see here that our retained earnings, as we've got a net income loss for the first 2 years. Yeah.
Actually, for the first 3.
Yeah, so you got net income loss 252,000.
Oh yeah.
Income loss of 213,000. But the cumulative effect means we don't have a positive retained earnings until 2014.
Right.
Yeah. And when I go down to the balance sheet here, you'll see the balance sheet cash at bank. See the cash at bank scenario is poor.
Mm-hmm.
So this business...
That looks like a heck of an overdraft, doesn't it?
Yeah, so this business is a lot of work.